Okay, so we're going to look at GBPCHF for our trade today, which we closed at around 1.3 R here for a short. Going back in the week and looking at the fundamentals that have been happening, we would see some geopolitical tensions that were very much volatile throughout the entire week, affecting major dollar pairs as well as the pound sterling. Relatively speaking, we see that G-Swiss was actually moving on a downward channel, making these lower highs and lower lows over the past few days. And so we're going to look at the daily time frame, and we see that at the beginning of this year, around January, G-Swiss was already coming down and making all these lower highs and lower lows and leaving liquidity here on premium pricing above 0.5 Fib. And so we see that price came back up, and we waited until about the end of April, liquidated all these areas of liquidity before breaking structure here, creating a new invalid area of supply in the daily time frame situated over here. And that would be a valid area of supply for me, as I would count this as my fractal low, which it broke. And so when it broke that fractal low, that for me, that was a valid area of supply. And we draw our Fibonacci retracement from that swing high to that swing low. And around the last week of May, last week, price came back up and then came back to, once again, premium pricing. And this is where we looked for our opportunity for a short around that range. Price came back up to these areas of liquidity situated over here with these descending highs. And we see the price also created an area of supply reacting to those descending highs and breaking structure, creating a new and valid area of supply in the 4-hour time frame situated over here. And so when we go to the 4-hour time frame, we see that price came back down, reacting to that liquidity and premium pricing, coming downwards, expecting this to come even lower. And so when price broke, we actually entered already. We entered right over here because we assumed that this would be a very aggressive move because of the fact that it did not come back up after breaking structure here after that 4-hour supply. And so what happened conversely at around the May 25, it came back up, reacting to some risk on news that was very, very rampant over the past few days when there were some announcements that there would be a ceasefire and some developments in the Strait of Hormuz. And so that propelled the price to come back up. However, this area of supply was still in control. And as we can see here, I drew these two trend lines here, and we can see it better and appreciate more in the daily time frame. We see that it has been respecting that descending channel or that bearish channel. And so we see that price was still respecting that area of supply and that trend line channel, even though there were all these releases of risk on news. And so when it came back up there, consolidated for a few days, and around the end of the day of May 28 to about May 29, we see the price moving aggressively down, creating this new invalid area of supply in the 4-hour time frame, moving downwards from there, hitting our TP there for a good 1.3 R. And so in my opinion, I think this would continue to push lower and actually break below this low and respect this overall trend, this descending bearish channel. But we chose to get out because of the weekend holding. It has been already 1 week, and the swaps for GBPCHF are kind of high, in my opinion. And so we chose to get out for that risk to reward. Once again, it's a rinse and repeat for GBPCHF.